Hello traders, it is Wednesday afternoon, May 1st, and that means it's time for me to do my weekly video. We're going to review last week's trades first of all, see how they did. They actually did very well. Before we do that, I'd like to take care of some housekeeping. Everything that you're about to see tonight is available in Option Stalker. You can go to my website, www.oneoption.com. You would spell it all out. And if you haven't taken the trial before, you can take the 1 week trial, only costs you $1. That will give you access to the chat room. It will also give you access to Option Stalker. Tonight, we're just going to talk about the Option Stalker trading platform, and the focus is to find swing trades. If you click on Stalker Training on the website, you'll see all of my videos, including the weekly swing trading videos. I would encourage you, if you think that this might be good research, validate it. Go and watch each one of these videos week by week. I start every week off by reviewing the prior week's picks, and you're going to see they've done really, really well. That's because we have a systematic approach and we have the most powerful tool at our disposal to deliver the best stocks. So let's get started. We are going to find a couple of great trades today. In the middle of the screen, you'll see a pop-up. That's where I post my bulletins. It's also where I post my morning comments. So that's something that's included with Option Stalker. I post them before the open. And you can go back and read previous messages. This is also where you'll find a link to tonight's video. So after I record it and post it, you'll be able to come in here and see the video. Now, for those of you who are not members, you'll always see my videos posted a week after the fact on YouTube. But I still encourage you to go and watch them because you can see how we're performing week to week, and some of the picks from the prior week are still going to be valid. So there will be some good opportunities in there. Most importantly, you'll learn our system. So let's take a look at the S&P 500. Got to do this first. Everything starts with the market. Market first, market first, market first. Got to get the market right. 75% of all stocks follow the market, so this is a critical part of the equation. Today, we opened on the high, closed on the low, and that left us with a big red engulfing bar. That is not a good sign, especially when it engulfs an extra 3 or 4 days with it. In this case, that's where the last recording took place a week ago. So you can see week over week, we have actually a negative net change from where we did the video last Wednesday night. Now I'm going to add a trend line here, and this is very important. We're going to make it fit as best we can, and this has been a nice tight trading channel, so I'm going to use it right about like that. And you can see we close just about at that uptrend. Now we do not want to break below this trend line and close below it. We can trade below it, we can dip below it, and then reverse and go higher. That's fine. But if we close below it, the market could be in trouble and we could see follow through selling. This is probably the first logical support level right here, and that takes us down to about the 285 level. And yes, the market could fall that far, and it could fall there very quickly. It could fall there in 1 day. All you have to do is take a look at some of the other charts from earlier in the year. That's a 1-day move, could get us right down to that level. I'm not forecasting that. I don't believe it's going to happen. All of the economic news has been pretty good. Today we had ISM manufacturing. It missed. So as long as domestic economic activity remains strong, the market will be able to rally. But everyone's fearful that global weakness will eventually flow into our economy. Even the Fed's a little bit concerned about it. So that number did set a little bit of a negative tone for the market today, but we've seen other engulfing patterns like that, and yes, there it led to a little bit of a sell-off afterwards. There we had another engulfing pattern. You can see there was weakness for about 2 days and then the market rebounded. So I'm not going to be calling for a massive market decline here. We are going to be biased towards the bullish side, but I will also try and find maybe one or two shorts that you can consider if we close below this level. And I'm going to call it 291 on the SPY. If we close below 291 on the SPY, we'll probably see another 2 or 3 days worth of selling follow through, and that probably will set us up for a decent entry point for long positions. Earnings have been quite good. China's got a little uptick in their economy right now. Europe's economy upticked a little bit. I don't want to paint a big rosy bullish picture because I think the upside rewards to the market right now are smaller than the downside risks. But until we start breaking major technical support levels, I'm going to be favoring the bullish side. So we're going to go into lists. We're going to be favoring the bullish side of the market, and I'm going to click on Wednesday, April 24th. So when I'm done with tonight's presentation, I'm going to put a Wednesday, May 1st list together. Abbott, 1, 2, 3, 4, 5. This is where we could have gotten in on Abbott. We saw the earnings. It bounced off of that 100-day moving average. I told you I really like this stock. Look what it's done in the last week. It's gone from 76.50 to 79.50. That is a beautiful $3 move. Worked out really well. Cisco, we ran a pre-earnings search and we were looking for put credit spreads to sell. This was our level on the put credit spread that we were looking to sell below. And you can see Cisco has drifted a little bit lower, but it's still hanging in there. It has a tendency to rally into earnings. So if you're selling out of the money put premium, we've had a little bit of a pullback in the stock, but you've also had a week's worth of time decay working in your favor. Position probably a little bit against you, but not too much. Make sure these put spreads expire before the earnings announcement. We never, ever, ever hold over earnings, ever. That is a crapshoot. I don't engage in crapshoots. EA was another stock that we looked at for a earnings play. Stock tends to rally into earnings. Here you can see it's been in a nice general uptrend, and we were looking to sell below this support level at the 100-day moving average, which is 92.71. So if you were to sell a 92.50 put here, if you did that, you're in great shape because this stock has moved higher and you've got a week's worth of time decay. You're making money on that one. KNX, loved it last week. We had earnings. Stock rallied out of the gate. As I mentioned, very easy trade to manage because when we get these horizontal breakouts, that is our stop. So we get the earnings announcement, we get the breakout, the stock opens higher the next day, and it stops us out right here. So that was probably about a 70-cent loser, it looks like. Let's call it a dollar loser. So not a good trade. Stock is looking quite weak right now. 1, 2, 3 big bearish bars with gaps between them, and we're below the 100-day and the 200-day moving average. I would be shorting this stock if it can trade below this level tomorrow. So you can see my alert is below the 100-day moving average. This will be a good short. This is not a stock that I'm going to put on our watch list tonight. I'm just putting the alert up for my own trading purposes. You can also see the volume's been very heavy during this decline. So this was a loser. Abbott, good. Cisco, EA, very good. NVIDIA, another earnings play. You can see here the stock dipped, and this is where we're looking to sell a bullish put spread. We might have actually had the 50-day. Yeah, I think we were leaning on the 50-day moving average. This is where we wanted to sell our put spread, and you can see the stock came down and touched that 50-day moving average. This 175 level is kind of what I was looking at for the bullish put spread. Stock is at 180 right now. You've had a week's worth of time decay. Probably is a little against you, but not much. With all of these bullish put spreads that you're selling ahead of earnings, it's critical that the market stay above that trend line that I showed you. If the market's starting to fall apart, you want to reel those bullish put spreads in. STNE was a stock that we were looking to buy on this 100-day moving average breakout. That was our entry right there when it broke above the 100-day moving average, and we would be out for a scratch. So no harm, no foul on that one. But I do still like this chart, and I have an alert set so that if the stock can rally above, and actually I'm going to move this line, I'm going to delete it, I'm going to click GTC, and I'm going to move that up to this resistance level right here. If the stock can take out this horizontal resistance level, it will go in and fill the gap. And that's a nice move. That's from $30 to $34.50. That's better than 10%. Yeah, I'll take that any day. So, scratch on STNE. Overall, given that the market has moved lower from when we did the recording last Wednesday night, we're in pretty good shape. Abbott was an excellent winner. Cisco might be a little bit against us. EA definitely moving in our favor. Nvidia might be a little bit against us, but again, those are put spreads and time decay working in our favor. So let's get on with this week's analysis and see what we can find. I'm going to go to one of my favorite searches. Pop Bull is actually what I want to look at. Let me do one more thing here. I'm going to show you what I like to do. There's the SPY. Let's go into a 5-minute chart. You can see lots of movement today. There was an FOMC announcement right here. Initially, the market liked it, tried to get through the high of the day, and then it just fell apart. Well, I love these kind of moves. Most of you are probably thinking, well, you love them because you get to buy stocks you like cheaper. Yeah, that's part of the reason, but the main reason is that it helps me identify relative strength, and I love relative strength. And we're going to use that to our advantage because if a stock was able to hold its own today, it wants to go higher. And when this market bounces, those are going to be the first stocks to take off. In fact, for day trading, I've got specific searches here. You'll see 10RSW Bull 30. Well, what the heck does all that stand for? One option, relative strength, weakness, Bull 30. In this case, we're in the bullish side, so there's a bullish search. All of these stocks here have bullish price action, 30-minute, 45-minute, 60-minute time intervals. So let's click on the 60-minute time interval. These stocks all performed well in the last 60 minutes relative to the market. So there's a good chance they might be moving higher. See that relative strength there? While I'm recording this, I might as well put on the relative strength indicator here. We'll give it a little bit of room. And there you can see when the orange line is above 0, that means relative strength. So this stock looks excellent. But we need to zoom out and look at the daily chart. Yuck. No need to get into that trade right here on this breakout here. So it's simply bouncing. That's why it had strength near the close. So all we're going to do is we're going to click through and look for strength. I like this. I like this breakout. I like this stock. Fox A, 21st Century Fox. I like it. This is good. It's got plenty of upside. Really like this. And that will go on the list. Let's take a look. There's a nice breakout. Look at that strength into the close. I'll overlay the SPY. And you can see this gray line is what the market did. And this is what the stock did. That is relative strength. Fox A makes the list. I like it. Definitely makes the list. So we've already got we're only a few minutes into this and we've already got our first candidate. So let's see if we can find something else. Keep going down the list. That's actually pretty nice as well. Going to keep looking. I'm just looking for a good chart. Compression in here, nothing to really write home about. So we're just going to keep looking. I like this little move higher. I like this little breakout here, but the stock has a couple of moving averages to go through. I'll tell you about another quality that I like in a stock. Look at that nice, beautiful, tight range and trend. When this stock gets on a trend, it continues that trend. And you don't see a lot of, well, you do see quite a few stocks like that, but you see more of them that are all herky-jerky all over the place. Up, down, up, down, up, down. This is what we want. Nice, orderly price action. So this trend has reversed. We've got a little uptrend here if you connect the lows. We're trying to get through horizontal resistance. Stock might have been able to get through that 50-day moving average today if it weren't for the market. So yes, I like it, but it's got some resistance right here. I'd probably hold off on it right now. It would not be my favorite pick. No, not bad. Trying to get through that 100-day after earnings before the open. That's what the B signifies, but got some resistance levels there. This stock is actually through resistance. It tends to rally very nicely, trend very nicely through that 50-day. Yeah, this is a pretty good one. No, that's actually a nice bearish channel right there. And if this stock can break through that 100-day moving average, it will be a good short. Not putting it on the short list, but I'm going to make note of it for myself tomorrow. I may day trade that one. Just going to keep moving through. Nice bearish one there. Oh yeah, I like that. Look at this, nice strength here. We've got a breakout through horizontal resistance right here. That's beautiful. After earnings, let's zoom out. We'll hit the minus magnifying glass. Oh yeah, it's got plenty of room to go up to $148. So lots of room to run. J&J. J&J is going to make the list. Already we have 2 stocks on our list. I've barely even gotten started. It's so easy. Just got to flip through some charts. Not a bad chart. You can see how it had earnings after the close. It tried to rally up and take out this high, and it sold off all day, probably because of the market pressure. So that is using a relative strength and weakness indicator. Okay, this is a search that everyone has available to them. You don't have to do a thing. You don't have to configure a thing. So I like to use it in particular when the market is in an uptrend, but when it has a bad day, like today, because then my relative strength is super, super easy to spot using these. And we use these during the day all the time. So if I've got a 30-minute market sell-off, I'm going right to this one. 45-minute sell-off, going right to this one. 1 hour sell-off, I'll go right to that one. I want to see where this strength is. Now we're going to take a look at Pop Bull, one of my favorite searches, and I don't see anything with real liquid options in here. Oh, Apple's a good one. We were on Apple early today in the chat room. Here's the problem with these big gaps higher. When you have a big gap up like this, it takes a while for the stock to settle down and to resolve that gap. And usually, even if it goes higher for a few days, eventually it's going to come down and start to fill in this gap here. So when you get a huge gap, you've got to give it a week or so to kind of settle down. Then once it starts to fill in and find its sea legs, then it'll start grinding higher. That's when we have an opportunity. We'll take a look for some post-earnings plays also. I'm going to click through real quick, but I don't want to look at too many of these. That's not a bad chart right there. You could lean on that 100-day moving average. That would be a pretty good buy. But look at this stock. Down, up, down, up, down, up, down, choppy, choppy, back and forth. No real pace or direction to it. That's pretty nice breakout right there. You can see the quality of every stock on this list. That is a really nice compression breakout. You can see last earnings, okay, B before the open, A after the close. So you can see earnings in Option Stalker. By the way, Option Stalker includes real-time quotes. You don't have to pay anything extra for it. You don't have to have a special brokerage account. It is included. Beautiful gap up, and look at that follow through. Compress, 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 compress. Earnings, beautiful gap up. Maybe we get some follow through on this. So this would be a stock that I would watch for follow through. Am I going to tell you to buy it right here, right now with the market pulling back? I would prefer to try and buy it right here on the low, and I think you might have a chance to with the market pullback. The closer I can get to this gap, the more I like the stock. But would I want to buy it right here? If it starts to put in another positive day when the market's down and another positive day when the market's down, then I know it's got really good relative strength. Maybe. So HLT, definitely nice looking stock. Apple opens on the high and pulls back most of the day. We were all over this in the chat room today. Very easy. Look at the relative strength right out of the gate. I put on the system signals here, gave a buy signal right on the open. If you just trade the buy signal when the stock has relative strength, it's a very easy system to use. Here you get a little sell signal. Okay, well, let's take some profits right there. Oh, we're back on a buy. Stock is still strong relative to the market. You get a nice little move. And then it's pretty much done for the day, but really nice. But look here. Get a sell signal, relative weakness. That was also very, very nice move. I wouldn't touch Apple right now because it had a really good number, but this is a bearish formation, especially if the next day we get a bearish bar that closes above this high. That would be a failed breakout and something from a technical standpoint that would be referred to as an evening star or a shooting star. Bearish formation. And this is nice. AER, very nice. You got a nice move up here. You've got a compression. You had earnings before the open. You had the 200-day moving average here. You've got good volume. You've got the relative strength indicator above zero. Very, very nice. Stock moving higher. And it pulled back a little bit on the close with the market selling off, but overall still put in a very, very good day. So I like it. And here we got the stock pulling back. I'm going to get back on the daily chart. Nice breakout, but it couldn't hold it. So I would watch this. This is one you might be able to buy close to that breakout. But if you're able to and it doesn't take off after a few days, then you've got to kind of get out of the position because this one wants to stay in this range and you need to see follow through. The fact that it backed off all day tells me that it might want to go back in this range. So if you can get it right here on the breakout and then it starts to grind higher, good, you've got a nice looking trade. I'm going to go in and use the custom search. We're going to take a look for some trades. I love Bull Pop Bull. It's one of my favorite searches. And we're going to take a look. And I told you I'd go in and take a look at some earnings trades. Right now we're right in the heart of earnings season, so we might as well focus there. I'm going to click good option liquidity. Yes, we can search for option liquidity. And I'm going to just put a 3 in. That's kind of an arbitrary number. Anything greater than 0 is going to give you a stock with pretty good option liquidity. And we're going to go into a projected earnings date, because I'm going to look at stocks that are about to announce. We've only got 2 more trading days this week, so I'm going to go to May 6th. And these stocks will go to May 17th. These stocks will have a tendency to rally into the earnings announcement. So I clicked earnings date, and I'm going to click pre-earnings bull. And I've got stocks with liquid options. So there's our list. At Cisco, we've already looked at that last week. We'll click on some of the rest. I'm going to put this off to the side. Actually, I'm going to put it on a different screen because it'll be a little easier for me to click and explain what's going on. BABA. I like this for pre-earnings. We've got the 50-day moving average right here. That is what you want to anchor your trade around. So you'd want to sell a bullish put spread below this 184 strike price to stay out of the money. This is horizontal support right here. Okay, see how the stock has come to it and bounced off, come to it, bounced off, comes back to it, bounces off. Today, the stock wanted to break out. Oh, did it want to break out? Pulled back all day. So you can see the stock opened here. It shot higher. Looked like it was going to the moon, and then it pulled back with the market. So we know that it has relative strength, and we could see that right here. Orange line is above zero. It's going to announce earnings in the next couple weeks. It has a 75% probability of rallying into the earnings announcement. We have horizontal support here, plus we have the 50-day moving average, all that we can lean on. So sell the 184 puts, maybe you buy the 182 puts to establish your bullish put spread. If that 50-day moving average fails, the stock trades below it, then you have to close the spread down. But in all likelihood, it will tread water or move higher. Again, this stock wants to go higher. Let's take a look at what it did for the day. See, there you can see, opens here, rally, 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 but then it starts to soften with the market. We'll overlay the S&P, and you can see how even with the market pulling back here, the stock was moving higher. Relative strength. Soon as the market bottoms out, what's the stock do? See, the market's going up. The stock's like, yeah, I was hoping for that. Makes a new high. But now finally, when the market pulls back, look at this big market pullback. What does the stock do? It compresses. It flatlines. So here's the edge to trading relative strength, which is what I am all about. You're on the wrong side of the market. The market pulls back hard, but because you're in the right stock, it treads water. You can get out and break even. If you were trading the S&P 500 and you were on the wrong side, you lost a lot of money. So you can see the market falling back here and struggling to hold this bid. You've got all this time to get out of the stock without losing money until finally, during that final huge sell-off by the market, yeah, the stock's going to participate in that sell-off too. That is your edge right there. There are a lot of times when the market can move lower, but you still make money because you're in the right stock. Now, as long as technical support levels haven't been breached by the market, you can weather the storm, you can stay in the stock. When the market recovers, the stock will take off. But if you start breaking major technical support levels with the market, you have to exit these long positions. That's why I drew that trend line on the SPY right at the beginning of this video. It's critical, critical, critical that you watch the market. Market first, market first, market first. I preach it all day long, every day, because most people have tunnel vision. They find a great stock, and then that's all they zero in on is the stock, and they forget about what's happening in the overall market. So very, very important. But I like BABA. Lots of strength. This stock wants to go higher. It might even be a buy pre-earnings if the market recovers. But it certainly is a great bullish put spread candidate. Okay, so enough preaching. Let me go back to the daily chart. I'm going to take off that SPY overlay. Tends to obscure the chart a little bit. And we're going to go into the next one. I'm going to put this back. I'm not doing Cisco. I'm not doing, I will look at Disney. Not looking at EA because we already did that one the prior week. And those trades are working out pretty well. So JD, you can see a little bit of a down channel here. Stocks starting to break out. This could be a bullish flag formation. It tends to rally into the earnings announcement. If you're going to use this, you would use that $29 support level right there, and you'd lean on that 50-day moving average. So you'd sell the 29 puts, maybe you buy the 28 puts. I like to get at least a 25% return on these trades. So if I'm selling a credit spread with a 50-cent spread between the bid ask, I like to get at least a dime credit for that. So I can make a dime, I'm risking 40 cents. Dime divided by 40 cents is 25%, so I'm making a 25% return. A lot of you that are not familiar with selling bullish put spreads might go, why the heck would I do any trade ever where I can make a dime but lose 40 cents? Well, the rationale behind it is probability. Your probability of success is very, very high. And in this particular case, if you're able to get such a return, the stock can stay flat, the stock can move lower, the stock can move higher. You'll make money in all of those instances. You just can't have the stock below that 50-day moving average. And by the way, we know it likes to rally into earnings. It's a very powerful search. Got a lot of members using it. I'm going to click on the next one. I'm not a big fan. You know, there's horizontal support here, but the stock really hasn't done much of anything. This is a bearish looking chart to me. I would definitely not be selling a put spread on this one. In fact, if it breaks down, I want to know about it tomorrow. This looks good. Roku. It's got a lot of premium too, a lot of implied volatility. That's very nice. Good relative strength. You would have to key off of a support level, which, because it is a volatile stock, this 55 strike might actually have decent premiums. You'd have to take a look at it. The stock's at 63. That might be a little bit too far out of the money. It came in and it filled this gap, which is nice. I like it, but I think you'd have to go too far out of the money, and it is a volatile stock. So I would take a pass on that one. And finally, Walmart. 50-day moving average you can lean on here. Walmart has minuscule option premiums. So I did not take a look at one, and that was Disney. Look at Disney. It just blew through this on news that it was starting its own streaming video, and it had a lot of news surrounding it. Good movies coming out. That's too big a move for me to want to sell any puts on that. In fact, look at this. 1, 2, 3 big bullish bars down. This stock could give back some of those gains before earnings, so I wouldn't touch Disney. But we do have another put spread, and right now in tonight's session, BABA is one that we're looking at for a bullish put spread. So now we've got 3 stocks already. Love this. You could even go long BABA too into earnings. You just need a good, strong market. We need today's sell-off to be an aberration. We need to see nice relative strength in the stock tomorrow. If it starts to tick, tick, tick higher, this line's above the 0 line, you got everything you need to get long into earnings. Get out before the earnings announcement. You'll also hear me preach that all the time. So that was a pre-earnings search. Now that we have lots and lots of stocks that have announced, earnings date previous is what I'm going to mark. And I'm going to be looking, I can go back as far as I want. I think I'm going to have a ton of candidates that have announced in the last week. So I'm not going to go back too far. I'm going to click on the 22nd, and I won't go to today. I'll go to yesterday. I want a couple days to elapse. I'm just going to click this. Look at all these stocks. These are all companies that have recently announced earnings. Well, I don't want to look through that many symbols, so I'm going to start to narrow the field. And I'm going to be looking for strength versus the S&P 500 on a daily basis, D1. This is a 4-hour basis, 2-hour basis, 30-minute, 15-minute, 5-minute. The shorter your time horizon, day traders, the more you'll be focusing on these columns. The longer your time horizon, swing traders, you'll be focusing on these columns, H2, H4, D1. So on a daily basis, I want to see that relative strength. Now I know how I could narrow this search very, very quickly. Show me a stock that was above the prior day's high. So this stock weathered the entire storm today. Well, there we go. I've only got 2 stocks to look at. Well, I can knock through that list pretty quick. Let's see what we got. They both announced earnings. They both have relative strength. They both finished above their prior day high. Cerner, there's the earnings announcement. Boom, boom, boom. Let's zoom out. It's approaching that new all-time high. Sure looks good to me. I'm not going to say to buy this one because it's moved so far and it's up near the high end of the range with the market struggling a little bit right now, but you can see the relative strength. Yeah, I definitely like it. There are buyers in this stock. We'll go into a 5-minute. You can see the stock kind of chopped around today. So the daily chart looked better. Grub is one that I found early today. And I did great on this. Traded it right out of the open, posted it in my chat room. Buy signal here, huge relative strength. I rode it pretty much up to this level right in here and took profits on it when the market was struggling. It was a big gain. Went from, I think it was about a $3 gain, somewhere around $68 to $71. It's a really, really nice trade. So let's zoom out and take a look at it on a daily basis. Why did I like it so much? Well, the stock has been in a steady downtrend. You've got big support here. You had the stock bouncing off of support with a inverted hammer. Stock opened today and it started to move higher, and it had a new search, 1, 2, 3, 4 bars in a row that were all very, very bullish. 4-bar breakout. That's a new criteria that I just added. You can use it on a daily basis, on a 4-hour basis, on a 5-minute basis, which is what I wanted to. All major moves usually start out with this pattern. You click on these results and then you look for these stocks. So next week I might be able to use that. I don't have enough data to run it for a D1, which would be 4 consecutive very, very bullish bars, but I will use it. And I'll show you some stocks. Cerner would show up on it that will really take off. Let's be a little bit less restrictive with this because we excluded an awful lot of stocks. Let's go in and look for stocks that had heavy volume instead of above the prior day high. Not many stocks met that criteria. Okay, so here we've got a new list. So what do these stocks do? Heavy volume today, good relative strength versus the SPY, good option liquidity. They've posted earnings in the last week. So remember, I'm looking for stocks that gapped higher, have settled down a little bit, and now might be ripe to move higher. Some of these may not be good. That is not a good stock. COP, ConocoPhillips, energy stock, no go. No, thank you. This is coming back to test that breakout. So this is not bad. This might be an opportunity to get long right on that horizontal breakout, but that would be your stop also. You'd have to stop the trade out if it breaks through that level. Not great. Lots of resistance here. This is GE. It had a nice big breakout, but it's right on that 200-day moving average. Choppy back and forth. Nope. Grub we took a look at. MA was nice. He had a nice big breakout, stock pulling back, filling in this gap right here. So put an alert right there. If that stock pulls back here, I want to know about it. This would be a very easy entry point to manage because you buy it here and you can stop it out right there for hardly any loss. But if it does gain its footing and the market starts to rally, it could really go. So not too bad. NXPI, earnings there. Again, holding that gain even with a down market. Yeah, this is probably a nice looking stock. I'm going to put one right above that level to give me an alert if the stock rallies above it because it's been able to hold up pretty well. I like the breakout. See if we got anything else. STX. Nah, it's still got to get through horizontal resistance. WDC. After the close, got to get through the 200-day moving average. So no, not great. I'm going to do a little. I still want to look at those stocks that announced earnings a week ago. Now I'm looking for a trade signal on the stock and relative strength. I'm going to look for something that had relative strength into the close today, which was a very, very weak period, and see if anything meets the list. It's kind of our usual suspects, but we got a couple of other candidates in here. Actually, we've got quite a few. Let's take a look. APC is a buyout. I'm not going to even click on that. So, for those of you that like to bottom fish, this is pretty nice. Bristol Myers, after the number, stock moving higher, getting some relative strength, lots of room to the moving averages. Got to get through this horizontal resistance level right there. We want to see it through that. It touched it today and backed off. If it can get through that, yeah, it's broken the down trend line. So it's got some decent things going for it. Cerner we've looked at, Grub we looked at, Coca-Cola. Coca-Cola was one of those bullish put spreads that we sold right in here before earnings. And we leaned on that 100-day moving average, and that one worked out beautifully. Stock continuing to grind higher. Got a little bit of a sell-off here today, but yeah, this is a pretty nice looking stock. I think it's going to continue to move higher. It's got some resistance here, so I don't think I'd want to buy it at 49.20 with resistance at 49.80. There's just no upside to it. Merck, big sell-off, earnings, stock rallies, able to hold the close from yesterday, pulled back from the gains today. It's got that 50-day moving average to get to as well, but I like it. I think this is a pretty good stock to buy, and there's your stop right there. So close, that 100-day moving average. We want to see that 100-day moving average hold. But this is a really nice bounce, and you can see the relative strength starting to come. So I'm going to say yes to Merck. I like it, but that 100-day moving average has got to be your stop on it. Right there. And if you wanted to be a little bit more aggressive, which we will, we'll use 77.60 as a stop on a closing basis. So we want to make sure that it gets through the 100-day and a little bit lower. That open needs to hold. That would be our stop. Two more and we're done for the night. PFE, really nice bounce off of the low here, but choppy, 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 choppy. No thank you. Starbucks, full head of steam through this horizontal resistance level. Earnings after the close there. Still looks pretty strong. So not a huge mover, but definitely a strong stock. Let's go through. I did promise you I was going to look for a bearish trade, didn't I? All right, so I'm going to take this down. I could use a number of searches in here, but I'm going to cut to the quick and see what I can find in Pop Bull. That should, or Pop Bear, excuse me. And I'm going to look for liquidity. I pretty much know these symbols, so that is a nice breakdown right there. This is Garmin through horizontal support. That looks pretty good. It's got room to go. I'm going to keep looking for stocks that we all know. NOV, not too interested there. That's a really nice looking short right there. Got all sorts of breakdowns through the 200-day, through the 50-day, closes on the low, got room there. All right, I might have to put that one on the list. I'm going to see if I can find something better. And I'd like to find something that may not be bad. Williams-Sonoma below the 100-day. Going to have a lot of stocks in the retail sector announcing earnings soon. So you have to make sure that you're aware of those earnings announcements. Target, breakdown below the up channel here, below the 200-day moving average. Yeah, that looks like, boy, a doji right here after the big drop right here. So now we're through that. So we've got a new closing low. That's pretty good. Got to see what else I might be able to find in here that looks good. Yeah, I think I'm going to end up going with one of these stocks here. And I am going to look at Target. I think will be about as good as we'll find. BBBY. That one might work also. Bed Bath & Beyond. We've got too many moving averages right here. Starting to spend a little bit too much time looking for these bearish candidates. So I don't want to belabor the point. I promise you I give you one that looks pretty good. And I think Target looks pretty decent. We want to see the stock below this low. So I'm going to put a condition on that. And we're really close with this low right here. And that is yeah, I can't do that. Got too much support here on the 100-day. I might go back to Disney. I think I'm going to because it's got 3 consecutive down days, and here's where you get short. If it can close below this 135 level, so now it would give you a 4th bearish bar, and you're below the open from this bullish bar, then it will have a chance to come down and fill in even more. You can see how the relative strength is starting to wane. One more weekday might push it right down below this. I would like to see that. And again, the condition is we aren't taking shorts unless the market breaks that uptrend line. So that's the most important thing out of all the trades this week is 191 on the SPY was a level that we looked at that needed to be breached, and the market needed to close below that level before we would consider any short positions. So caveat number 1, we close below 291. Caveat number 2 on Disney is it has to get below 135. Then you can take a short position in it. It's a very, very big move. The stock doesn't have a tendency to make monster moves like that, so I think it got a little overextended. It's due for a pullback. I'm not saying I think Disney's going all the way back down into here. I think this is a really decent move, a really nice breakout from a major horizontal compression, but it could come back and it could test this 127.50 level. Right now, we're just looking for a little bit of a move. I don't want to get short with the market near an all-time high. So there's still a tremendous amount of upward momentum. And until we start getting major technical breakdowns in the market, I don't want to be shorting a lot. I want to be favoring the bullish side. I want to be looking at this dip today in the market as a buying opportunity. It doesn't mean I'm coming in tomorrow with both guns drawn, ready to buy, buy, buy. No, I want to see support. Show me support, show me a bounce, and then I'll be willing to dip my foot in the water and start taking a position in some of the stocks that we looked at. Here's how we build a list. Click on List, click on the drop down, click on Create. I'm going to label this Wednesday, May 1, and then I'm going to put the stocks in, and I'll start off with Disney. That's our potential short. I liked Fox A, J&J, BABA. That was a put spread we were looking at, but you could go long that stock too. I like Merck also. Save and close. We'll do a quick recap. Like it to go higher. Watch that breakout. Want to see the breakout and follow through into earnings. Disney we just looked at. That's our potential short. Fox A. Love this. This is going to be a nice one. Love that horizontal breakout right there. Big tails under the candles. Good momentum upward. J&J. Really nice horizontal breakout, continues to push higher, good relative strength, and Merck. So that concludes tonight's presentation. I probably found 2 or 3 stocks in the first 10 minutes. If I didn't have to describe everything and show you how to use the features in the platform, I could have saved myself a lot of time, and I could have done this in 5 minutes, maybe 10 minutes. That's what it should take you on a nightly basis to find your swing trades. And if you're diligent about clicking GTC and placing these alerts when you run across a stock that might not be set up right now, but it could set up in a week or two if it makes a breakout through a particular price point, you're going to log in one day, you're going to have 2 or 3 pop-ups saying, here I am. I wasn't right 2 weeks ago, but I'm right now. Consider me. And that'll make your analysis super easy. You come in, you turn on your computer, you log in, and there you go. There's 3 trades already waiting for you. So thank you so much for attending tonight. If you like the video and you're watching it in YouTube, please give it a thumbs up. Please subscribe to my channel. Thank you. We'll see you next week.